So this could be the beginning of the rally, especially after Jerome Powell came out and said, we're going to raise rates. Because what do you think everybody's doing now? They're shorting bonds. How's it going, fellow traders? It's Magic Trader here. It's August 26, 2023, and here is the latest set of data that has been reported by the CFTC. The positions held by the largest institutions in the world. All right, take a look at that. And let's begin how we always do by taking a look at gold. Well, guys, what a week we had today. Didn't we have Mr. Powell coming out threatening that they're going to be increasing rates even further, right? Increasing rates even further. Now, let's take a look and put this into perspective. So if we take a look here, we know that gold has been dropping for some time now, right? Last several weeks. And what fueled that move, if you remember correctly, it was the sell-off in the euro. And why was the euro selling off? Because the banks needed to take profits on their long positions. Okay, we've been saying this for quite some time. And as you've seen, gold has been following suit. Now, what do we have? We have institutions now increasing their shorts. Look at that. That's pretty massive. Look at their short positions. They went from 70,000 to 74 to 85 to 111 to 124,000. They're starting to become aggressive with their shorts now, okay? They're starting to become aggressive with their shorts. Now, you can see this in the coloration of the cells as well. Look at the last couple cells here. You see the redness coming into the cells? That's telling us that they're starting to really focus in on their short positions. And remember what I told you they were going to do? Take profits on their long positions because the euro was doing the same thing? Well, that's exactly what they ended up doing, all right? So what do we have now? We have price decreasing, and it's got more room to drop as the banks are increasing their short positions. So this is an interesting thing that's setting up here because we've always talked about how there's room for price to drop on the euro US dollar. And we can see that there's room for price to drop here on gold. And we see them adding to their short positions in gold. So pretty interesting because now we have somewhat of a direction that's becoming clear here, right? Further move to the downside. I'd say over the medium to somewhat long term, all right? That's what I'm looking at. All right? So I bet you're asking yourself, what are retail traders doing right now? Well, retail traders are about 54% short, 46% long at this point. Okay, so roughly 50-50. There is no strong bias as of yet. All right, let's take a look now at oil. So we had somewhat of a rally up in price off of the demand zone that was contacted down here. And when we look at long positions, we can see that they're cooled off. And if we look at short positions, we can also see that since July 25th, their positions have been somewhat cooled off. We look at the coloration of the cells here, and we can see that they are neutral, which tells us we really don't want to be trading this right now, okay? When the sentiment is neutral, that means we should be neutral with that asset. And so that's why I'm not trading oil right now. I'm sitting on the sidelines and waiting for something to become just a little bit more clear. The US dollar, okay? So we've had a push up recently, and we've talked about the reason why this was happening. It was fueled by the downward move in the euro US dollar. And then Powell comes out and talks about how they're ready to raise interest rates again. Now, that puts some upward pressure on price, but I have a feeling that they were going to push price to the downside, and they did. They flashed it to the downside, and then later on they curled it back up. So it kind of scared some of the investors out, or I should say short-term traders out, by trying to profit from a short-term move. And so if we take a look at the positions here, we can see that they're increasing their short exposure, okay? Increasing their shorts. Interesting. Prices rallying up, and they're increasing their shorts. Now, why would they want to do that? Well, let's take a look at what's happening here. Look at the coloration of the cells. Is it not leaving from green to now becoming a little bit red? It is, okay? Now listen, it's just one cell of aggressive red color here, all right? Good, because they increased their shorts from 14 to 18,000. So, you know, we can't make a judgment call just based on one cell of coloration. We also have to take into consideration that longs went up by about 4,000 as well, all right? But it's something to take notice of, because I've said that I have a feeling that the euro US dollar is going to continue dropping, but once it contacts some demand that we have lower on the charts, we expect there to be a reversal. So is this the beginning of them accumulating a short position for a drop that's coming? I don't know. It's a question that I'm asking. It's something on the back of my mind, and it's something that I think you should be thinking about as well. Okay, now let's look at the Aussie. Look at the Aussie. They've gone pretty aggressive with their longs since the beginning of August. 46, 61, 68, now 72. Okay. So are they preparing for a reversal? Something like the opposite of the dollar? They're preparing for a move up in the future? Don't know. But take a look at their shorts. Maximum shorts, 135,000. They've never been so short before. And this is coming as price made this massive drop in price. Okay, down the charts she goes. So what's taking place? What's going on? Well, you look at retail traders, they are 79% long. And this is coming as the banks are accumulating a short. Now, why would they do that? As they're pushing price lower, why would you be accumulating a long position? Well, again, they're doing the opposite. They're helping to facilitate the banks opening up their short positions. So I'm not touching this one. They've been, in a bearish cycle for a very long time. I'm just going to stay in the sidelines until something becomes clear with this, and then I will trade it. But for the time being, it's a no trader for me. USCAD. So look at longs. They start getting aggressive. The last two sells, okay? They bumped them up their positions from 30,000, cooled off, to an aggressive 48,000. Now at the same time, shorts are somewhat aggressive as well, but you can see how sporadic the coloring is. They add some, they take some off. They add some, there's nothing here sustainable, all right? And recently we had a little bit of bearish sentiment kicking in, and now we're going back to neutral, which is telling me stay on the sidelines because I don't want to trade this when it's neutral. But remember what I was saying about the US dollar, how we're getting a rally in price and it looks like they're starting to accumulate a short position. Does that mean that in the future we're going to get a drop at some point? I think there's good odds of that, because remember, we do have institutional supply that came into contact here, and it hasn't completely played out to the downside. So this is something that I'm watching. I'm watching the data week after week to see if this picture starts to play out and starts to, if all the pieces of this puzzle start to come together to paint this picture that I have in my mind, then the odds are going to be increasing that there's likely going to be a drop coming soon. At this point, retail traders, 93%, folks, 93% short. When they become extremely short like that, we tend to see reversals, okay? Now, could it be short term? Yeah, probably short term, but we tend to see moves in the opposite direction. Is that why the US dollar is preparing with some shorts? Because we're going to get a short-term move to the downside? I mean, that's definitely a possibility, all right? Considering that they're so aggressive with the USCAD. But when I look across the board, USCAD is the most aggressive that I see in terms of positions. Retail traders were super aggressive with the euro, and that's what allowed price to bump up to the upside. You remember that? When I think euro was like up in the 90s or at the end of the 80s, 87s, 88s, around there. And then they bump price up, okay? So now the USCAD is the most maxed out with respect to the retail position. So maybe it's not time yet, but it's something to be watching for, especially for you day traders who like to take short-term moves. US Swiss, Longs are cooled off, shorts are cooled off, not much going on. Price contacted this area of demand down here, and it's been upwards ever since. But look at this price action. I don't like price action like that. It's like stair steps. You see that? Stair steps all the way up. Yeah. I don't like trading things like that. It's very concerning to me when I see things like that. It's not really nice proportional trading, so I like to stay away from things like that. Retail traders, 50-50. Okay, there's no strong bias on this one. So we will move along. Here we go. Here we go. Euro US dollar. Now take a look at their long positions. 239. They've been increasing over the last couple of weeks. Okay. 228, 232, 239. They've been increasing their longs over the last few weeks. Now this is after them profiting from their positions, reducing them from 264 down to 228. So profit taking exactly as I suspected. So why are they increasing longs? Well, are they preparing for this? Right? It's similar to what we're seeing with the US dollar. They're increasing shorts. Are they preparing for a reversal? Is this what's going to happen? Is the USCAD going to drop? Okay, these are things that I'm paying attention to. Remember, massive supply is in play here. So we expect that the pressure is going to be to the downside, and likely we're going to see a continuation of a move to the downside. Right? This is the downward medium to long term, okay, long term move to the downside. It could take a few months for price to eventually play out like that, but this is something that I'm definitely watching. Retail traders, 69% of their positions are long. They were a lot more long recently, but they just recently got out of their longs. Probably because Jerome talking about all this bullishness on the dollar, which means bearishness on the euro. So they're probably exiting their long positions to get in short, which is another reason why the banks would want to push price to the upside here, to get them to exit their shorts and get back into long, so the banks can offload these 239,000 and bring it down maybe to 235, 230, 225. I don't know. Just saying. Something to think about. I definitely think that is a high possibility. Okay, let's take a look at the pound. Didn't we say pound was going to follow suit with the euro? And that's exactly what took place. It's moved to the downside from our supply zone that we located. Look at that reduction, 135 all the way down to 83,000. And then recently adding them again. Same thing, right? Same thing we're seeing. Maybe we're going to get a push up like that? Probably, maybe, we'll see. Shorts cooled off, not much there, so we leave this alone. If we look at the positions held by retail traders, they're 67% long. 67. So maybe they're going to do the same thing. Get them to switch their positions to short, and then push price up, and then reverse it last minute. Something to watch, US dollar, Japanese yen. They took profits on long positions as I suggested that they would, and that fueled a move to the downside. And now we see a push to the upside, and they're reaccumulating long positions. Now, with respect to the US dollar, Japanese yen, they're not increasing shorts here. And I'm starting to get a sneaky suspicion that there is a chance that price is going to boom like this. So we might get some strength here in the US dollar, Japanese yen, because if the US dollar does want to continue medium to long term to the upside, then that's going to help fuel this one. You know, you look at what this is doing, and it's stronger than the dollar. Okay, it's been definitely acting a lot stronger than the dollar. Let's go back to the dollar again, right? See this move from the lows, right? From the lows. US dollar, Japanese yen, it's high up there. It's not from lows, it's from high up there. So it is stronger, all right? Shorts cooled off, nothing there. So it looks like this one could really blast off, especially when I look at here, right? We got an institutional supply zone here. This is a powerful zone that we saw price rally up to and then have a move to the downside that was formed, and now it's coming back up. If price closes up here, that's a bullish engulf inside a a supply area. That is opening up for a move to the upside like that. So definitely something that I'm watching for. Most traders are short 73%. So that tells you, you know, they're setting things up for a move even higher. Okay, very easy, because price continues higher. Guess what retail traders are going to be doing? Adding to their short. Keep an eye on that one. Kiwi. They're adding longs recently, and they're adding shorts. They're adding shorts, okay? And that caused price to drop. And look at this. This is a mix of everything. Blue, reds, blue, reds, blue, red. Don't trade it. Just stay out of this, okay? If there's going to be a short-term move to the upside, this one will be affected by it as well. And then potentially drop if the euro does turn around and continue to head lower from its area of supply that we located, okay? I could also tell you that retail traders are 79% long. So can definitely push this a little bit lower. But if they rally to the upside, they'll probably be exiting their longs and starting to get into shorts. We'll see. We'll keep watching that. But they obviously have been adding and adding and adding to their long positions as price continues to drop. All right, I got one more special one for you. Let's take a look at bonds. This is the TLT, okay, 20-year Treasury bond. And I'm watching it very closely because I suspect that we're going to see a move to the upside. I've been watching for proof that the institutions are getting into long positions. All right. Now, right now, shorts are pretty aggressive, 289,000. But last time they were that aggressive, what they do, they cause price to rally up. Okay. They close those positions and it caused price to rally up. They added some longs here, but they have not been able to sustain those positions just yet. All right. Now we're starting to see them adding one more time from 94,000 to 108,000. Okay. We were very cooled off in the 70s not too long ago. So this could be the beginning of the rally, especially after Jerome Powell came out and said, we're going to raise rates. Because what do you think everybody's doing now? They're shorting bonds. Okay. So, and don't you think maybe the banks want to offload those shorts that they have so many of right here? So how do you offload them if nobody wants to short, right? That's what I'm suspecting is going to happen. Keep a close eye and stay tuned. Hit the like, subscribe, make sure you subscribe and hit the notification bell so that you get informed when there's new videos that we do, okay? Because we're going to track this very closely, and you're probably going to want to know what's happening in these markets so that you can profit alongside us. All right, ladies and gents, that's it. www.whiteoakfx.com. Thanks for watching. Thanks for your comments. I always read every one of your comments. I always respond to them whenever you have any questions. So leave your questions down below. If you want to find out more, www.whiteoakfx.com. Come and join us. Our fee is only $125. It's not bad considering how much value you get from what we do. You'll learn supply and demand analysis in ways that you've never seen anywhere out there. And the proof is in the pudding. All right, come and join us before we raise our prices sometime later this year. All right, that's it. Enjoy the rest of your weekend. Take care.